And I'm going to turn it over to James to start this webinar for the Griffith Family Foundation and our community organizers and nonprofit partners. We're going to post this on our YouTube channel. So if you missed the first 5 minutes trying to get back in, that's okay. You can scroll back and catch back up as soon as we get it posted. But I'm going to let James take it away and talk a little bit about the unemployment programs.
Thanks, Josh. Welcome, everybody. Give me just a second and I'll share my screen. I've got some slides for us. Okay, so the first topic we're going to talk about is the Pandemic Unemployment Assistance Program. And I've got here on this first slide a date of April 26th, Sunday. This program is really dynamic and they're just starting to get some of the guidance going. And so so this is based on Sunday's information. And so to understand the pandemic unemployment piece, we need to talk a little bit about the Georgia Department of Labor because it's a state and federal components to this program, and they're administered by the state. There's three pieces to it. There's the traditional employer filed partial claim, then there's the federal pandemic unemployment compensation, followed by the pandemic unemployment assistance. And all three of those play a role, and they'll have a little bit of a nuance to it. So we'll kind of walk through those. To understand the state program, you need to have just a tad bit of history. The state DOL unemployment compensation program is basically a safety net for folks that have been terminated wrongfully. It's typically an adversarial process that's between the employer and employee, and it requires an actual claim to be adjudicated. There's actually a reviewer that gets in the middle of it, a claim examiner that gets in the middle of it. And so it usually takes weeks and weeks for these claims to get adjudicated and for any benefit to be seen by the employee. So, and typically the program has a max benefit of $365 a week, and it's only for 20 weeks. And it typically, if you have taxes withheld, which is at 10 for federal and 6 for state, somebody really only nets about $306 a week. And it's eligible for folks that are, even if they're partially furloughed, just had a reduction in hours. So it's kind of a small program. What we're coaching folks to do is that if you are an employer and you are having to lay off people, you can go in and submit what's called a partial claim. And what that does is that significantly expedites the process, because basically what you're telling the Department of Labor is, I had to furlough folks. And so what that does is it takes the adversarial process out and just goes ahead and allows those benefits to go over to the employees. So it takes about a week from the time you file that claim for people to start getting paid. The thing that it does, and if people have had to do it, realize is you've got to upload every week the employees that you have furloughed. And so, and this process is only for your W-2 employees. So it does not include the self-employed or the independent contractors. I've got a couple slides, screen prints, if you will. You go to the typical site for the Department of Labor on the employer side, and you get this screen and you have to log in, and then you go to there, a couple screens deep. But what they want you to do is they want you to upload this Excel file. And the benefit of that is, because you have to file every week for your employees, it saves you the time of having to go in and key every single detail in there. And the file's pretty simple. It's just a typical Excel file. It starts out with Social Security numbers, then you have your weekend date and your name, and then it walks through just all the demographics that you would expect to have. The thing that we've been tripped up a little bit about, 5 fields down, is earned $7,300 field. And you have to tell the Department of Labor, whether the employee has earned $7,300 while they've been working for you. And if they have, you put a yes. And then if they haven't, you put a no. The following field, you have to say how much they've made. The weekly gross field, which is next one after that, is another one that y'all need to pay attention to. because when you hire people back or you reduce their hours and they're still getting paid, that's where you put how much they made that week in that field. So what it does is if somebody was working, making $400 a week and you cut them to half and now they're only making 200, you put the 200 in that weekly gross, and then the Department of Labor system will adjust their benefit. Um, and then there's a field at the very end that I want to point out, and it's where you click, you just tell the Department of Labor that they have been furloughed due to COVID-19. So partial claim has really been helpful. We've had folks that have gotten benefits literally within a week. And so, we highly recommend that. So that's the traditional state program. And then as part of the CARES Act, we have this pandemic unemployment. And what that does is it increases the insurance that's paid by $600 a week. So somebody whose benefit was $365 now moves to $965. And that's basically for the period of April 4th through July 31st. And so how that happens is if you are currently on the unemployment, which means your employer has filed your partial claim, then you'll just automatically get that benefit going forward. And so those payments started happening a couple of weeks ago. So the people are now getting those payments. The other thing that the CARES Act did was allow for self-employed and independent contractors to apply for this benefit. It's a difficult process, and it's been frustrating for folks so far, because what has to happen is the state asks that you apply through the normal unemployment insurance website, and then they basically have an examiner review your claim and they deny it. And then they send you an email that says, hey, you've been denied for state benefits, but we believe you're eligible for the pandemic unemployment assistance, which is a federal program. And so they started sending those emails out on the 22nd. So we've only been doing that for about a week. So we've actually not really had anybody go through this process totally. But we're hopeful that we're going to have some folks. You get to that through that link we put there. It's the dol.georgia.gov/PUA. And when you hit that, you'll get this screen here. And this screen is pretty good. It does a couple things. One, it rolls you through the steps, but it allows you over here, as you can see, there's a tutorial, and you can apply for unemployment benefits right there. And so I put this whole text in here because it's just such a convoluted process. You've kind of got to look at it and read it to believe it. But basically, you get denied, and then you reapply, and you get approved. And so it's a difficult process, but the point is, it's worth $600 a week to folks. So it's kind of worth the process and the heartache of it. And then what down here at the bottom, which is important, is the reason they have to go through this denial and then review your claim a second time is because they don't have any information on the earnings in the Department of Labor system. So when they come back and ask you for additional information, you're going to have to give them 1099s or 1040 Schedule C, something to prove, pay stubs, earning statements, whatever you have to prove that you have earnings, so then they can determine the benefit eligibility. So a little bit of a tough process. If you hit this link to apply, and then you're going to get this one, and then you're going to get this one. You just hit a bunch of, and then you'll finally get to the application, and it's ridiculously tedious. It's 20 pages long. I didn't put all the pages in here, but what it does is it allows you to save and exit anytime you want to. And what you're basically doing is it's based on the legacy system where they're trying to help somebody get a job. So it's a little bit cumbersome, but the benefit's going to be well worth it, because it could be 10 or 12 weeks at $600 a week. The thing that the next step that hasn't happened, which will be, so somebody gets a benefit, and so they're clipping along at their $600 a week, and they will go back and backdate it. So if you get into the system and say, hey, it takes them 4 weeks or 6 weeks to get it going. They will backdate it all the way to April 4th, so they'll catch you up. But what's going to happen is once you're approved, you've got to go in each week and hit this thing that says request weekly PUA payment. And when you hit that button, it brings up this screen, and it's a whole lot of details. But basically what you're doing is you're attesting that you didn't make any money that week you made. And so if you read number 5 down there in the middle, it says, make sure you report any wages during the week they are earned, even if you have not actually been paid for the work. We advised folks wrongly yesterday because I was telling folks to report them when they got paid. Well, the Department of Labor wants you to report them when they're earned. And what they'll do is they're going to obviously still do a determination of eligibility. And if you're eligible, you'll still get the 600. If you're not eligible, then you'll get 0. But for the next week, you'll need to apply. So as you have sporadic income, you'll need to just make sure you keep applying, because this program is good to go through July 31st. I also put a couple little pages from the handbook to verify that they really do mean when it was earned, and not necessarily when it was paid. So in summary, it's going to add $600 to everybody, and it broadens the definition of employees to include the self-employed and the independent contractors, and it also adds 13 weeks. So if you're getting a state benefit, it will add that. It's just that you've got to remember, you've got to go in and request the weekly payment. And it's all in that one website, the PUA website. So that's kind of unemployment in a quick nutshell. If anybody has any questions, we're certainly willing to entertain them here, or feel free, to send us an email or text or something, because it's confusing and difficult process. So.
Yeah, and nobody, please just use the chat box to post your questions as we go, so we can keep those organized and answer them. The bottom line is, like even there are a lot of artists, and there are a lot of people who would not have been eligible for unemployment who now are for the first time. So if you can document that you were getting paid for gigs last year and you're not now, obviously, because the whole economy is shut down, you can use this pandemic unemployment to apply and get $600 a week. So that's really an important program that if you've not signed up for yet, you need to, because there is going to be a lag time between when you sign up and when they get you your cash. So you need to go ahead and get your application in now for the pandemic unemployment. And then I think, James, you're going to continue with a few more slides.
Yeah, I got 2 more slides. Let me share my screen again. Just a quick update. The $1,200, which is known as the oops, sorry, I'm on the wrong slide. The $1,200, which is known as the economic impact payment. The first round of checks went out. The direct deposit went out on the 9th, and the first round of checks went out on the 24th. So if you have not gotten your payment, please go to that website there, which is irs.gov, coronavirus/economic impact payments. And on that website, you'll find this, which is Get My Payment. And you'll go through a couple of screens there, but basically it'll give you the status of where your payment is. And I found a real funny hack today. If you go in there and you key in your address, and it says it can't find you, key in your address in all caps. They say there's a glitch in it that apparently it's looking for all caps for some people's addresses. So, but in any event, that right there will give you an update. You can also go in, and if they don't have your direct deposit information, you can put that in there too. So, because I know the $1,200 is going to be helpful to everybody. So we want to make sure that you guys get that. So take a look there. All right. All right, Josh, back to you.
Yeah, the next section is going to be Bethany's. Bethany's going to pick up and talk a little bit about EIDL and PPP. And Bethany, I slotted my stuff in at the end of yours. So just when you get to you're going to, I think your last slide is the about the SBA loan products, and then I'll step in. Bethany?
Cool. Okay, everybody. So this is like, I thought yesterday was the hippest group we'd done a webinar with the Creative Industries group, and then Tanja and Christelle and Kayla, y'all got some street cred. These are like cool people on the line here with us today. So I'm going to try to be a little more brief about this than I would have been for the sake of time. The first program is the Economic Injury Disaster Loan and Grant. This is a program that you apply directly through the SBA for. There's one way in and out of this program, and that's their online application portal. And they shut it down last week, and we think it's likely it may not reopen. However, stay in touch with us, stay in touch with your network. If it does go back online, it probably won't be online for long. And it is super, super easy to apply to. It will take you about 15 minutes. We have a great Google Doc that you can look it over and know exactly what you need, so that when you go to the website, literally it will just take you a few minutes. And nonprofits, faith-based groups, basically anyone is eligible to apply. So definitely put yourself in that queue. Part of this program, you may have heard about this, is the advance. Because the demand was so great, the SBA has limited the advances that they're depositing on behalf of businesses and nonprofits to $1,000 an employee. Folks are starting to get those. So folks that applied through their newest online application, which they call the streamlined application, some of the earliest folks who applied have started to see these deposits show up. There's no communication. So if you're in this queue and you're like, I haven't heard anything, and it's like it dropped into a black hole, it did. But one of these days, some money is going to show up, and it's going to be an advance where $1,000 per employee on, in your business or nonprofit. So be on the lookout for that and keep the faith. The SBA is just so overwhelmed. There's no way to check on the status of the advances or the loans. The other thing to know here is that I'm not in my present mode here. Just know that right now we don't actually know anybody who has gotten a loan award offer from this. That's going to be the second piece. And if it's taking about 3 to 4 weeks from the time you apply to get your advance, at this rate, it's probably at least going to be a couple weeks after that until you hear from an SBA loan officer. We think that they're going to offer you a small loan amount at that time that does not have to be what we call collateralized or secured. But if you have assets with your business or personally that you can secure that loan, they're worth a similar value as the loan, that would make the SBA willing to increase your loan award. Have a conversation with your SBA loan officer about that when you do finally hear from a contact through that program. Also, be sure that if you're hesitant about taking out a loan, that early on when they initiated this program, they said you could hold the loan award in suspense for up to 6 months, so you could wait and see if you actually do even need to draw the money down. You can wait for a year to make your first payment. You can defer payments for a year. And we encourage everyone to get in this queue if you have the opportunity to do so, if you haven't, because it's probably going to be the best loan that you can get. And even though none of us want to take on more debt than we need to, what we're very concerned about, and we know that there are some of these predatory online lenders sneaking around small businesses and nonprofits right now and saying, we can make you a bridge loan until you get this money from the SBA. And sometimes the APR for those loans, they're just at outrageous rates, and they'll swipe your account daily. So even compared to a nice non-disaster SBA loan, these idle economic injury disaster loans are going to be at a term anywhere from 20 to 35 years, and they'll be at 3.75% interest for businesses and 2.75% for nonprofits. So if you do have to borrow money, it's really not going to get on any better terms than that economic injury disaster loan. And essentially that money can be used for any kind of business operating expense. Because no one's been offered a loan award, we don't know details of how they want you to track your spending, but we really encourage you to just keep tabs on that spending. And as we learn more about that program, just stay in touch with Newtown and our small business network. We think we'll be learning more about this process as some folks in Middle Georgia start getting these loan awards. The other program, and part of the reason that we, when we were working with Tanja and Christelle and Kayla to schedule this, and we pushed to hold it this afternoon, is many of you probably heard that both of these programs ran out of money, and the federal government approved a whole nother rounds. And as of yesterday, the Paycheck Protection Program essentially reopened, and the SBA started reapproving awards here. We really do not think this money is going to last long. So hopefully a couple things here that we talk about will answer questions if you have applied. If you haven't and you think this could be helpful to you, we encourage you to move very quickly. We just recorded a webinar on this that we could share with you that walks you through step-by-step how to apply. So this program is different than the economic injury disaster loan because there's a range of lenders who are approved, okay, to take your applications and essentially give you the awards. Typically banks, but there are some online lenders, and they've become more common in the last couple weeks. Essentially, any small business owner is eligible to apply. Again, this program, nonprofits, faith-based groups are also eligible. The premise behind this program is essentially to help you cover what they called the cover period. It was a 10-week period when they came up with the legislation that they were hoping was going to help you cover the time where you were going to be really limited by shelter-in-place orders and an income stream. So essentially trying to help you keep all your staff in place for the dates of February 15th to June the 1st. So the way they're essentially, so you don't go and say, hey, I need $100,000 for this loan program. They're essentially going to make you determine your typical payroll costs. And so it's not just compensation, but if any of you have employees and you're also paying related benefits costs, that's also included in this calculation. And so they're essentially going to take a typical month of operations and multiply it by 2.5. For our self-employed folks, I know we got a few of you out there, some artists, some creative folks. They're going to look at how you've either taken owner's draws or your average pay from 1099s, and again, multiply it by 2.5. The critical piece of this program is the forgiveness piece. So basically what they're trying to do is help you keep your expenses at the same level or help support the expenses that you had pre-disaster to post-disaster. There is a catch though with it now, because when you get these monies, and any of you who have applied, you're gonna have to kind of work these tweaks out. But once those funds are dispersed, once you close the loan, you're only gonna have 8 weeks to spend that money on staffing expenses. And you can also potentially spend that money on any kind of interest on any kind of debt, rent, mortgages, or utilities. Okay, so that can also be a small portion of your spending. But what you're trying to do is spend all of that money on what your SBA loan officer tells you is eligible expenses in that 8-week period. They can also do partial forgiveness. This is probably not going to be too relevant to many of you, but if you did lay people off and you can hire them prior to June 30th, but again, it also, not only do you have to hire them back before June 30th, you've got to be able to spend all that money in 8 weeks. So for those of you who've maybe furloughed folks, this can be a little bit of a difficult calculus, and you need to think this through for yourself. And if you lower your wages of your team more than 25%, then they're going to deduct proportionally the amount of that loan award that they're going to forgive. So if it turns out some of your spending with your PPP awards are not spending monies that the SBA approves, then you're going to have to pay back that leftover amount, the unforgiven amount, over a 2-year term starting at a 1% interest rate. They're not looking for you to collateralize on this loan. It's really, they're not concerned about what kind of assets you have for your business or even personally what you have. They just are trying to help calculate what your payroll costs are to cover this 2.5-month term. There is the option to defer payments if you don't get all of your loan award forgiven, but hopefully you will. If it's not fully forgiven, there are no prepayment penalties. And again, just have a conversation with your SBA loan officer. We're hearing that a lot of folks who are getting this loan or who have to create a separate bank account. So it's explicitly clear what they're spending this on, and it's going to make it easier for the SBA to say, yes, all of those expenditures are approved. It's entirely forgiven. You do not have to pay any of your loan monies back. And then the other thing to know is that you can pair the paycheck protection loan with the economic injury disaster loan, but you're going to need to spend those on different expenses. So again, this is where the documentation of your spending with either of these programs, if you've applied or you're thinking about throwing your hat in the ring, you're going to have to really be diligent and do some bookkeeping, record keeping. This program has been a little frustrating for some folks because their banks maybe aren't participating, and then other banks, especially early on, were only, say, accepting applications from current customers. We have updated the form that Josh has been talking about, our resource guide, and it shows all the local lenders, and also now there's a greater array of online lenders who will just accept an application from anyone. So there's a lot more availability now of lenders who are participating in this program who would be willing to work with you. So definitely check out our list of local lenders. It's a table that we have in there. This is a basic PPP application. Critically, you're going to need documents related. If you do payroll, related to payroll. If you are a self-proprietor, independent contractor, you're going to need like your 1099 form submissions from your tax returns or your Schedule C from your most recent tax filing for your business. And you have to have at least filed 2018 taxes, okay? And again, we've been running this webinar that will break this down in more detail. And just know that if you need another loan option, the CARES Act, the other thing the CARES Act did related to business loans and business finance options is if you should qualify for a non-disaster SBA loan and close it within 6 months of the passage of the CARES Act, which would be September 27th, all of those programs, you're going to get 6 months of principal and interest paid by the federal government. So it's not a deferment. They're literally going to make your loan payments for you. So if you do look up come the fall and you realize, or maybe even late summer, I should say, because closing a loan takes a little time, but if you realize you're maybe going to need a little more money, just keep in the back of your mind that applying for an SBA micro loan or an SBA 7A loan might be a good option for you, your organization, or maybe someone else you know. Let them know that that is a benefit and could really make a big difference. And I think that's it around the SBA loans, Josh.
Great, thanks, Bethany. We've got a couple of questions in the chat box. Y'all keep them coming as we go. They're good questions so far, and we're going to answer them. But I want to get to the end because we might have a few more things. So the next section is mine, and I'm going to tell you a little bit about a program you probably haven't heard of, which is the Employee Retention Credit, and it may apply to some of you. So the Employee Retention Credit is an alternative to the Paycheck Protection Program. So for some of you, the Paycheck Protection Program is going to be a great option. But the Employee Retention Credit has some different features. So I'm going to tell you about those. Nonprofits and for-profit businesses can take advantage of the Employee Retention Credit, but it only applies during a quarter of the calendar year where your revenues dropped by 50% or you were partially or fully ordered to close. So both, one of those conditions has got to apply. With the ERC, you get half your employee's wages paid through a tax credit up to $5,000 per employee. And it's paid through a tax credit. So there's no application process. You don't have to find an online lender or go through a bank. You do this all on your own. And the way you do it is the money you would typically pay in payroll tax to the federal government, you get to just move that into your operating account and spend it on the business's expenses. So like Bethany said, the PPP gives you 100% of your wages for 2.5 months, and it's paid through a forgivable loan, and you have to get it from a private lender. So we've done a whole bunch of different scenarios, and there's some scenarios where this is better for the PPP and some scenarios where it's better for the employee retention credit. And it's just going to depend on how your business is organized. One of the biggest challenges about the PPP is you have to rehire 100% of your employees as soon as you get the money for the 8 weeks after it. So, and you also have to pay them at least 75% of what they were making beforehand. And then 75% of the total amount you get has to be used on payroll. And so there's really only 25% you can use on rent, utilities, or mortgage interest. So the employee retention credit, it funds half your wages. During any quarter, you meet one of those criteria, and the maximum credit's $5,000, and you get to convert the payroll taxes into operating funds, but you only get one or the other. So our first example is something similar to like Macon Arts or Newtown Macon. It's a nonprofit where everybody's still working, 10 employees, but it's been partially closed. So in this case, the ERC would provide, if you've got 10 employees at $600,000 a year, that's an average wage of $15,000 per quarter. So half of that would be $7,500. So you'd only get the max credit of $5,000, but you'd get that for each of your employees. So that'd be 10 employees times $5,000, which would be $50,000. The PPP, on the other hand, it would give you 2.5 months of payroll. So $600,000 divided by 12 would be 50,000. So your PPP would be 125. Now, you only get forgiveness on either the EIDL advance or the PPP. You can't take both. So Julie asked a question earlier. If she already got a PPP, but she applied for the EIDL and she's waiting on it. So yeah, the catch is you can't get forgiveness on both of them. So your choice is, what I would do is spend the PPP money on exactly what you're supposed to spend it on. And then you can spend the EIDL money basically on any other business expense, but you will have to pay that back. But the EIDL repayment terms are way friendlier than the PPP repayment terms. And there's no way to opt out of the EIDL now. They're just going to deposit it in your bank account without any communication. So that's one quick example of the ERC compared with the PPP. There are plenty of examples, like right now, if you own a restaurant that's closed, you don't want to get your PPP and bring all your staff back to work because there's no work to do. So in that case, the employee retention credit may be a way better option for your business than using the PPP, since you can wait till you are partially reopened to use it. So it just depends on a business by business basis which of those two programs is going to be more beneficial for you. Bethany, I think I'm going to flip back to you for some cash flow tips and some basics about budgeting.
Okay, so in the kind of subtitle or description of this course, when we were talking with Tanja and Christelle about this, we did want to point out, because now once you get yourself in the queue for these programs, and unfortunately they're really long lines, and please, especially get in line for the pandemic unemployment. If you haven't applied for the PPP and you're interested, please do. But then you're going to have to wait. And we've been starting to shift some of the work that we've been doing with nonprofit directors and business owners to your own self-practices on how to improve your business and performance. And one of the things that we really emphasize today as part of our weekly Downtown Merchant webinar is that consumer behavior, donor behavior is going to be totally different. It's changed. Even if we get this vaccine, people are going to be doing more things digitally than they used to. And so you're going to have to also start doing the work of, shining the mirror back on yourself and figuring out what you can do best practices wise to be able to sustain and be successful, because they are challenging times. And one of the fundamental places where that comes into play is managing and monitoring your finances. So we do have a few webinars that we're going to be doing. Emily's done a great one around communicating, staying in communication with your donors, your customers during a crisis. This is another one that we're doing cash flow planning. And I just want to show you some of the tools that we've developed for folks. We can share these as spreadsheets, and we think they're pretty helpful, but there are also other kinds of tools out there like online accounting software that can help you do that. And we're happy to help talk with you about how to use this information or use some of the great digital tools that are out there to help you just really enhance the kind of work and the analysis that you're doing so you can refine your business model and be even more successful. So let me show you this last little bit. Hang on one second. Sorry, I'm having a technical difficulty there. All right, let me just get to the right slide. Okay, so the key tools that we go over in more detail in the separate webinar, and that we just honestly emphasize in all the different kinds of business coaching that we do, is projections, budgets, and then cash flow analysis. So when we've been working with folks right now, specifically related to the COVID-19 pandemic, we've been really focused on the upcoming 3 months, essentially getting us through this shelter-in-place order, hopefully revamped up, and really trying to determine what kind of net losses you may be facing, and then developing a budget. So, and I'll show you the digital model in just a second, the spreadsheet, but you can essentially go in and test some different scenarios for yourself. As a, for instance, with the EIDL versus PPP, or should I maybe just go and take unemployment and shut my business down for 3 months and come back in full force in August? So you can use this spreadsheet to test some different scenarios. And then when you find the one that has you operating back in the black instead of in the red, you know, you can stick to that and use that budget as your guide. And then really critically looking at your income and your expenses week by week. And this is essentially just to be sure you have the cash on hand to pay your bills, because just because your income for the next 3 months looks good and you're in the black, it doesn't mean that you're not going to have a week where you catch yourself in a crunch. And timing is going to be more critical than ever. You know, as far as when bills and expenses come due, especially if you're deferring things and then they're not deferred anymore, and you maybe even have a larger bill than what you had previously, say for your loan or your rent. So the first thing that we've been working with folks to do is have a conversation with all your vendors, suppliers, lenders, and determine what you can defer. And we've got a deferment worksheet. I didn't include that here, but that's going to include information like your paper trail too. Like, I talked to so-and-so at Cox Cable and I don't have to pay my bill with any late fees until July 1, and they're not going to cut my service off until June 30. But really keep a paper trail if you defer any of your expenses. And then once you know what you can really reduce right now in operating expenses, and you have a really accurate look of what you think you're going to bring in this month, or say May, income-wise, get a sense of where you stand with the net loss. Hopefully a net profit, but if it's a net loss, just take that number and multiply it by 3 to get a sense of the kind of cash flow gap you're looking at for the next quarter. And then you're going to need to think about budget. And so we spend more time on this in the webinar, but you know, first you're going to think about what other kinds of relief cash are available to me. Maybe just my personal savings or my business savings. Maybe that EIDL advance just showed up. How am I going to spread that monies across to help address cash flow gaps? And then are there ways I can cut costs, expenses? And we do a little work on prioritizing bills in a separate webinar. And then we've been looking at all kinds of new ways to create new income streams, but especially a lot of that these days is through e-commerce, curbside pickup, ways that you can engage with your donors and your customers virtually. And then we're gonna use this budget model to help you figure out what are my strategies that I can use here, my bootstrapping strategies, so that I can operate in the black. And you're going to devise a plan. You know, so you'll test your scenarios and then devise a plan. And then the cash flow is just so critical, because it's just, you're going to make sure you actually have enough money in the bank to pay the bills. And I think I forgot to pull up the link and everything to this spreadsheet, Josh. So it'll take me just a second to just show everybody real quick what the cash flow gap. It's in the chat. Okay, perfect. I'll pull it up there. Yeah, so yeah, so that's the cash flow and not the gap one, the cash flow gap, and that's fine. Just the main thing to know, if you will share all the links to these, but when you go in, and I thought I was sharing my screen, I do this a lot. Let me just show you how to make a copy of this for yourself with these different resources. So we have one that's the cash flow analysis. I'll share the deferment worksheet with you, and then that cash flow gap one. But make sure you go here and make a copy, because as some of you know, when you work in Google Sheets, we've locked this because once someone goes in and make a change, it stays, and we don't want people to see your personal information, and we want the formulas to say. But in each of these, we've got examples. Sometimes it's helpful to see what another business theoretically could look like to help you understand how to go in and put this information in. And so we have all those available. We'll put them in the chat box here, so you can get the links to all the public versions of these files.
Great, thanks, Bethany. So I think we're ready for Q&A, and I've got two teed up. The first one's about 1099 employees and the Paycheck Protection Program. So the question was, can you apply for the Paycheck Protection Program if everyone who works for you is 1099? This question's come up really frequently, and the answer is basically you cannot use the PPP to pay your 1099 employees. It is designed for people who are on payroll. So your 1099 people, as far as the government's concerned, are independent contractors. So for them to access cash, probably the best program for them to use is the pandemic unemployment. Up until now, they wouldn't have been eligible for unemployment at all, but thanks to the pandemic unemployment, they can apply. So you should go ahead and share the link that we shared earlier from James's slides about pandemic unemployment and have them apply. Now, the little bit more complicated answer is you can use the PPP to compensate yourself. So even if you're the only person who is really an employee of the business and everyone else who works for you is 1099, you could still use the Paycheck Protection Program to compensate yourself. So it's not going to cover your 1099 people, but it will cover your owner's draws. And so that's where we went back to, like Bethany was talking about, trying to establish exactly. I mean, I know all of y'all compensate yourself in any number of ways. So it's going to be an issue for you to establish what you actually paid yourself from the business last year. And that could be copies of your bank statements where you transferred money from the business to your personal account. Hopefully you got your tax returns done and you've got that Schedule C where a professional went ahead and helped you segregate out exactly what your personal benefit was. If you got the Schedule C done, you're just going to take that amount, that is your salary, and then divide it by 12 and multiply by 2.5, and that would be your PPP amount that you could use to help compensate yourself.
And Josh, contractors can apply too for PPP.
Yeah, that's right. So
and that's why a business owner can't include them, because they should apply for themselves.
Right. So yes, the 1099 employees, and so like let's say you're one of those people where all your personal income is from 1099 jobs from all different kinds of people. You can apply to the PPP as well, but you have to apply individually because you're considered an independent business. So the next question was from Julie, and she asked, are there any local foundations allowing grantees to convert restricted grants into operating grants? The only place I've heard that mentioned at all is the Knight Foundation. Alberto Ibargüen, the president of Knight Foundation, specifically said that you can contact your local program director, which for us would be Lynn Murphy, and asked to be considered for a grant to be converted from a project use to operating use. My advice, if you're going to do that, is to take the cash flow class with Bethany, because I think you need to make a really compelling case that here is my red number. Here's what we're going to lose without your help. And if you take this grant, it's going to solve our problem. So I think you need to have a really compelling roadmap that shows we can survive this, we will be sustainable, but we need this $5,000 or we need this $10,000 or whatever it is, that you can create a really compelling case that shows that just by converting that that amount from a restricted grant to operating, you're gonna be able to make things work. Now, honestly, if it were up to me and I came up with that plan, and I would approach any funder who had a restricted grant in my account to consider that. And that's going to be a highly personal decision that you make based on your relationships and the purpose of the restricted grant and how big your red number is. But there's no way I would go to a donor and ask them to release a restriction on a grant without knowing that release was going to make the difference, right? So I think you got a really compelling roadmap for how that's going to work for you. The next question was, can you get the EIDL as a grant and the ERC? That's a really good one. So I cut off my slides because we were running out of time, but yes, the answer is yes. So in the example I gave you, when you were looking at the amount that you got from the PPP, you got to reduce out the EIDL because between those two programs, you only get forgiveness on one or the other. But the ERC is different. So you can use the EIDL basically for any purpose for the business that's qualified for the EIDL, which is a huge list of things, and still get the employee retention credit. So one of our coffee shops downtown, I know they have chosen for that exact reason to use the ERC instead of the PPP, because they don't want to drag all their employees back to work for 8 weeks when there's nothing to do, first of all, but second of all, because they can go ahead and use the EIDL now to cover some of those critical expenses, and then use the ERC as soon as they do reopen. So that's a great question. And yeah, so there's a lot of strategy that goes into that, and it really depends a great deal on your particular business, but we'd love to talk one-on-one if we can help. And then Tanja posted for GFF that they would consider such a request as well. So Griffith Family Foundation would also consider releasing restrictions on existing grants. But again, I don't want to speak for you, Tanja, but I bet you'd want to see a roadmap too. You'd want to see some evidence that by releasing that restriction, you could really make a difference. I think that's true for all of us, as we want to show our donors that, I mean, our donors, they want us to succeed. And so I think that really almost any donor, if you can show them, look, I wanted to do this project for you, but right now we're not going to survive at all. If you can really show them how that's going to work, I think they would consider releasing the restrictions. We made it to the end of the list of questions. Does anybody have any others? I just want to thank Tanja so much for getting us together. So many of you have not seen since this started or heard from you, and it's really been nice to reconnect. I wish it was under better circumstances, but I hope we've been able to provide some helpful information. We're going to continue to be here too. So again, if you go to that, if you go to our COVID-19 page, you can sign up for individual coaching sessions, and we'll get in touch with you however it's convenient. So text, email, call, whatever. We'll stand 6 feet away from you in any appropriate venue and have a conversation about whatever you need help with specifically. But you look at the range of people on this call, and I can't imagine a community without you. So your work right now is really critical. I know it's incredibly stressful. All of us are having ups and downs during the days. Anxiety and depression are certainly taking a toll. It's difficult to find the energy and motivation, but I want you to know from me and my team at Newtown, we need you. All of Central Georgia needs you. You make this community so much more vibrant and fun and enjoyable, and that's important. So this is tough work. A lot of us aren't numbers oriented, and it's not going to be fun, but these are the tools we've got. So we really need you to take advantage. If you qualify, we need you to apply, because we've got to get you through this crisis so that you'll be strong on the other side to bring us your music, your art, to strengthen our communities, to coach and encourage our citizens, and just to make Macon the best place it can possibly be. So it's been great to see you. I really want to say thank you to my team at Newtown for all the hard work they've put in. I want to thank Tanja for making this possible. And we'll do it again. If there's more information we can provide, if there are new updates or urgent information, or Tanja, you hear from more people, you just let us know, and whenever, wherever, we'll be ready to help. It was great to see you all. Tanja, did you want to say anything else to close us out?
No, just want to thank you guys again. Thank you all at Newtown, and thank you all for joining the call. I know there's probably a ton of additional resources that you might need. And if you do have any additional questions, you can definitely still reach out to us. You can email me, Kayla, Christelle, reach out to us at hello@griffithfamilyfoundation.com. And we will get back to you with any information that we can find for you. And so I am learning just like you all are. So definitely forgive me, but thank you, Newtown, for carrying this through for us.
Thanks, Tanja. I hope you all have a great evening, and I look forward to seeing you all soon again, hopefully in person.
Thank you, Josh.
Bye. Thank
Bye.
you, guys.
Bye, everyone.
Thank you.
Appreciate